In Unit 6, we're going to cover financing. And, statistics in this industry have shown if a dealer has the ability to offer some type of financing options for your customers, you're going to sell a much higher number of vehicles. And, I do know dealers that just tell every customer to bring in cash. And, you're basically turning away about 90% of your customers by demanding a customer just bring in cash to purchase a motor vehicle from you. So offering financing can definitely increase your sales. And, there are basically two types of financing that you can offer your customers: on the spot financing and buy here, pay here. On the spot financing is a term used, obviously, when you have a relationship with a third party lender, such as a bank or an online dealership lending service. When your customer wants to purchase a vehicle, you can obviously just log on to that third-party lender on your computer, input your customer's information, such as their name, birth date, social security number, and then click submit. And, then the third-party lender will process that application and hopefully approve the lending on the spot. And that is where the term on the spot lending originated. So, if the third-party lender approves your customer's loan, which more than likely they will, the customer is going to make payments to that third-party lender, and the third-party lender will then transfer that purchase price into your account, normally within about 1 to 3 business days. And no matter what, we can probably help our customer get financing regardless of their credit, whether their credit's good, whether it's bad. Maybe they've had some bankruptcies. Then most of these third-party lenders will be able to assist us in getting that subprime lending. And although that customer, this going through subprime, they are going to pay a lot higher interest rate. But if they are, making their payments, then we are actually assisting them in rebuilding their credit. So also, buy here, pay here dealerships obviously operate just a little bit different. And if you have chose to become a buy here, pay here dealership, you might, for example, purchase a vehicle at an auction and then sell it to your customer with, the customer making payments directly to your dealership. But I want you to be aware, regardless of the type of financing that you might offer, if you offer any type of financing or simply assist your customer in gaining a loan for the vehicle you're selling, you will be recognized as a loan broker. Brokering loans does require you to follow several state and federal laws. And we are first going to cover some Georgia laws that will affect financing. And then we're going to discuss some federal financing laws, because the federal government tends to have a little bit more oversight on financing and all the laws that you will be required to follow. So first, a law that you need to be aware of regarding financing vehicles is the Georgia Motor Vehicle Sales Finance Act. Georgia law requires all retail installment contracts to be in writing, and a retail installment contract shall be in writing and shall be signed by both the buyer and the seller, which would be you, the dealer, and shall be completed as so all essential provisions prior to the signing by the buyer. So as a reminder, an installment contract will normally contain all the information regarding the financing. So that's going to show, when the payments are due, when the payment would go into default, when a possible repossession would take place, which hopefully that won't happen. But the dealer must present a completed copy of the installment contract to the buyer at the time it is signed by the buyer. If you do not provide a copy of your buyer, they can receive a refund of all the payments that are made. And as a reminder, we always want to make 2 copies of every document. So 1 copy of every document is going to go to the buyer, and 1 copy is going to go into the dealer record. So remember, we're always making 2 copies of everything. And once again, you will never, ever have too much paperwork, but you could have not enough paperwork. So you definitely want to make copies of everything. Remember, 1 copy goes to the customer and 1 is always going to go to the dealer records. You must also ensure the installment contract has a space for the buyer to sign stating that they have received a copy of the installment contract. So your customer actually has to sign that document stating that they have received copies from you, the dealer. If you're using a third-party lender, be sure the paperwork that you're using and is being printed during the loan application is compliant with Georgia laws, in addition to all federal laws. So no matter what, if you are shopping, third-party lenders online, ask them if they're compliant with Georgia law. Ask them if they are going to allow you to comply with the Georgia Motor Vehicle Sales Finance Act. If a person with that software provider says, well, what is the Georgia Motor Vehicle Sales Finance Act? Well, obviously, we don't want to use that third-party lender. So we want to make sure that any company we're using as a third-party lender is complying not only with federal laws, but we want to make sure they're going to assist us in complying with Georgia law, including all aspects of the Georgia Motor Vehicle Sales Finance Act. If you're operating a buy here, pay here dealership, be sure the documents completed by your attorney on every transaction are also compliant with Georgia and federal law. So, all Georgia installment contracts must contain the following information. It clearly has to disclose the notice to the buyer that tells the buyer, do not sign this contract before you read it, or if it contains any blank spaces. So we can never have any spaces, like I said, on the title or any type of finance installment contracts. Also, the installment contract must tell the customer they are entitled to an exact copy of that contract they're signing. So once again, I want to reiterate, we're always going to be making 2 copies of everything. One's going to go to the customer, one goes to the dealer records. And when we talk about financing, the customer is going to sign docs stating that they have received copies of everything. So, also just remember they will have to sign those docs to ensure that you have actually given them copies. But before I talk about federal finance laws, I want you to be aware that federal law does what we say supersedes state law. So, although we are following all of the state laws that come out of Atlanta, we're also following many of the stricter federal laws which come out of Washington. And there does tend to be many more federal laws that cover financing than state law. And I'm going to cover some of these with you now, including the Truth in Lending Act, the Equal Opportunity Act, and the very important Gramm-Leach-Bliley Privacy Act. So let's go ahead and start our federal lending laws right here. Let's start with that very important Truth in Lending Act, okay? The Truth in Lending Act requires you disclose all credit terms in writing and must disclose the following information in writing to any customer that is obtaining a loan for a vehicle. So in writing, we're going to have to show that customer the length of the time of the loan. We have to show the customer the amount financed, all finance charges, a schedule of the payments. We have to show the identity of the creditor, the itemization of the amount financed, the annual percentage rate, including applicable variable rate disclosures. Those must be included. That form's also going to show a total of all the payments. So you're familiar with this form, I'm sure, if you've ever financed vehicles in the past, or if you haven't, and even if you've gotten your own car loan on a vehicle maybe that you purchased, you've seen this great big long document on that transaction. It's got to also include the payment schedule, any type of prepayment or late payment penalty fees if applicable, a total sales cost, the demand feature, a security interest, if there's any liens involved or anything like that, insurance, the required deposit's got to be in writing, and also what's called the reference to contract. So, if you're using a third-party lender, this should print up for you every single time you hit the print button. But if you are going to be a buy here, pay here dealer, or if you're currently a buy here, pay here dealer, make sure your attorney's documents that is being drawn up for you to help you become a buy here, pay here dealer is compliant with the Truth in Lending Act. So just remember, we've got to provide written disclosure to all credit terms to each and every customer when financing is involved. Next, let's cover the Equal Credit Opportunity Act. The Equal Credit Opportunity Act. I want you to be aware, when you're helping your customers gain financing, you're also going to be following the Federal Equal Credit Opportunity Act. The Equal Credit Opportunity Act ensures that all consumers are given an equal chance to obtain credit. So, factors such as income, expenses, debt, credit history are still taken into consideration when approving or disapproving credit. But anyone involved in granting credit, such as automobile dealers who arrange financing through third-party lenders and automobile dealers that are offering buy here, pay here financing, and also motor vehicle dealers that act as a lien holder of financed motor vehicles, must follow the Equal Credit Opportunity Act. So, as a creditor, you may not discourage your customers from applying for credit because of their sex or their marital status or their age, their race, their national origin, or because they receive public assistance income from the government. You can also never ask your customer to reveal their sex or their race or their national origin or the religion. So think about this. It's very important, during a loan application interview, obviously we're going to be asking that customer a lot of questions, but there are so many questions, such as the ones I just mentioned, that we are strictly prohibited from asking during a loan application interview. You can never ask your customer if they're widowed or divorced, or maybe, if someone's applying for a loan, we cannot ask them about their marital status or request information about the customer's spouse unless the spouse is renewing with the customer or applying for that loan. I also want you to be aware it is against federal law to ever ask a customer if they receive child support. And I want to repeat that. You may never ask your customer if they receive child support. You can ask the customer if they receive other income, but we can never, ever ask a customer if they receive child support. You can't ask your customer for plans about having or raising children. So, you might just think you're having a good old time with a nice young couple and you're doing their loan application, and maybe you say, hey, are you two thinking about starting a family? Well, if you ask that during a loan application interview, you have broken the law. So we're never going to ask any type of personal or invasive questions whatsoever during that loan application interview. That would be a violation of the Equal Credit Opportunity Act, okay? Now also, you can't consider whether your customer has a telephone listed in their name. There's just a little technicality. And also, you may not consider your customer's age unless they're too young to sign contracts. And in the state of Georgia, that's going to be 18 years of age. So also, I want you to be aware, you can never refuse to consider public assistance income as any other income. So what I mean by that, let's just say, for example, you're a buy here, pay here dealer. And let's say you've got one customer that makes $2,000 a month working at some factory. And then you have another customer that maybe makes $2,000 a month from some type of government public assistance program. We have to identify those identically, okay? We cannot differentiate between public assistance income and employment income because that's another violation of the Equal Credit Opportunity Act. We also may never assume a woman of childbearing age will stop working to raise children. We certainly can't make that. And also, you can never refuse to consider regular support payments and like I said, you just never want to ask a customer any personal or invasive questions. But, if you are a buy here, pay here dealer, or you're working with that third party lender, then we must let the customer know in writing specifically why their credit application was rejected, okay? And you've got to do this within 60 days. So the dealer must give the customer a notice that tells them the specific reasons for the rejection of a credit application. So I want you to be aware, acceptable reasons would be, your income was too low or you haven't been employed long enough. We have to be real specific on the reasons for the declination. Unacceptable reasons for declining a credit applicant would be some random statement like, you didn't meet enough our minimum standards, or you didn't receive enough points on our personal dealer credit scoring system or something like that. So you can't be vague. You have to be real direct and tell them maybe your income was too low or you haven't been employed long enough, because indefinite and vague reasons are illegal under the Equal Credit Opportunity Act. So you have to be very specific on exactly why you are denying a credit application. So when you send an individual's application for financing to a third-party lender, the lender can give you information about why that loan was denied, so you can pass that information along to the credit applicant. So, the Equal Credit Opportunity Act permits a creditor here, say, for example, a third-party lender, to disclose the reasons for taking adverse action through a third party, such as a car dealer, when the third party submits an application to the creditor. But I want to read a very important part of this law to you. And one of the most important parts of the Equal Credit Opportunity Act states that credit applicants that have been denied equal lending opportunities under the Equal Credit Opportunity Act may recover damages from your dealership for up to $500,000 or 1% of your net worth, whichever is less. I want to repeat that very, very important statement. Credit applicants that have been denied equal lending opportunities under the Equal Credit Opportunity Act may recover punitive damages from your dealership for up to $500,000 or 1% of your net worth, whichever is less. So compliance. It is definitely the name of the game. So, I want you to be aware, if you are, say, for example, maybe you're using that third-party lender to do the financing for you, as we discussed a little bit earlier, more than likely that third-party lender will either allow you to download the software onto your computer, or maybe you're using some type of cloud-based system, but they are always going to have specific questions on your computer screen that you ask the customer during a loan application interview. In fact, I even know sometimes a dealer will turn that laptop around or whatever and basically let that customer fill out the information on a loan application interview. But with that being in mind, you're going to have specific questions that you're asking the customer. So, it may say, ask the customer how long they've been employed, ask the customer what their total monthly household income is. You don't want to reach around your computer and ask that customer, hey, are you married, or something like that during a loan application interview. But that would be a clear violation of federal law. So no matter what third-party lender you're using, make sure and just stay on those questions that you see on that third-party software. If you are a buy here, pay here dealer, then you want to make sure and have some legal guidance that so that buy here, pay here dealer attorney will maybe hopefully have some type of document for you. And I want you to also be aware, there are some third-party lenders, believe it or not, they will run your buy here, pay here for you. So that's something to keep in mind. If you haven't used a third-party lender, or if maybe you're exploring using a different one, you can certainly go to your favorite search engine. Maybe it's Google, maybe it's Yahoo, maybe it's Bing, and just type in Georgia third-party lender, or maybe Georgia dealer financing. And you're going to see a lot of companies right there that are just waiting to give loans to your customers regardless of their credit. Or if you want to be a buy here, pay here dealer, maybe this is something you haven't already done. It is absolutely imperative that you get some legal advice to basically draw up your installment contracts and things like that. But if you are a buy here, pay here dealer, obviously you're aware there can be that big snowball effect of income when all of our customers are making their payments on time. So, but that's not normally the case. Okay. But let's go ahead and move on. On the next screenshot here, you're going to see what's called the Gramm-Leach-Bliley Privacy Act. Okay. The Gramm-Leach-Bliley Privacy Act includes provisions to protect consumers' financial information that's held by financial institutes. And these regulations apply to financial institutes, not only banks, but any company that might be offering financial products and services to customers, such as us, a motor vehicle dealer. So among these services are, lending, brokering, or servicing any type of consumer loan, collecting consumer debts, and many other financial activities are going to fall underneath the Gramm-Leach-Bliley Privacy Act, okay? There are basically three parts to the Gramm-Leach-Bliley Privacy Act requirements. There's the financial rule, there's the safeguards rule, and then there's what's called the pre-texting provision. So let's first talk about the financial privacy rule. The financial privacy rule governs the collection and disclosure of a customer's personal financial information by the financial institute, such as a licensed motor vehicle dealer. The financial privacy rule requires financial institutes, just like a dealer that's brokering loans, to give their customers privacy notices that explain the dealer's information collection and sharing practices. So, in turn, customers do have the right to limit some of the sharing of their information. So, any software program that you're using for financing, they are going to hopefully have an automatically generated privacy disclosure statement that you can provide to the customer, and that's going to keep you compliant with the financial privacy rule of the Gramm-Leach-Bliley Privacy Act. The safeguards rule. The safeguards rule requires financial institutes, such as a dealer, to have a security plan to protect the confidentiality and integrity of the personal consumer information. So we have to be able to protect our customers' information, whether it's stored on paper or maybe on a computer hard drive. So, if you have paper docs or loan applications of previous customers, you want to make sure they're stored in some type of lockable type of paper storage, like a lockable file cabinet. Also, I want you to be aware any computer used during a loan application interview must have the latest antivirus protection, like maybe that's going to be McAfee or Norton or Windows Defender, because this law also wants to hopefully prohibit a hacker from coming across the internet and getting onto your records and basically on your dealership and stealing your customers' financial information. So we have to also do everything in our power to protect our customers' digital footprint, and that includes having antivirus software on any computer that you might be using during an online loan application. The pretexting provision of the Gramm-Leach-Bliley Privacy Act prohibits pretexting the use of false pretenses, including fraudulent statements or some type of impersonation, to obtain a customer's personal financial information such as bank balances. Okay, so the privacy notice. I want to talk to you about a very important part of every motor vehicle transaction that involves financing, and that's what we call your privacy notice. And this law was created under the Gramm-Leach-Bliley Privacy Act, but it is also enforced by the Federal Trade Commission. That's the FTC, and we're definitely going to talk about them much more extensively here in a later part of the course. But the Federal Trade Commission has developed additional guidelines to help dealers comply with the Gramm-Leach-Bliley Privacy Act and the Privacy Rule. And these guidelines show the privacy rule applies to specific situations that auto dealers may face. So, the privacy rule applies to car dealers who extend credit to someone, for example, through maybe a retail contract in connection with the purchase of a vehicle. Okay, so that's something you want to be aware of. Or maybe if you're providing financial advice. So maybe you've got two different third-party lenders and you're trying to advise the customer on the correct lender to use. Well, that's providing financial advice or counseling to a customer. So if you engage in these activities, which any dealer that basically is helping or assisting with financing is going to be engaging these activities, then the personal information that you collect must be covered by the privacy rule. So examples of personal information might include someone's name, their address, phone number, or other information that can be used to identify them in connection with the potential financing or leasing of a vehicle, even if that person does not fill out a formal application. And I want to repeat that. The privacy rule applies when a dealer obtains a name, address, or even a phone number, though the customer has not filled out any type of formal application, such as a vehicle loan application. The privacy rule does not apply to a dealer if a person buys a car with cash or arranges financing on their own through maybe their own personal bank or something like that, and they're just bringing in a check. So the privacy rule does not apply for us if we're selling a vehicle with cash, or if the customer has brought in, say, for example, their own cashier's check from their own bank. But if we are assisting a customer in getting a loan, or if we're a buy here, pay here dealer, then it is definitely imperative that we have that privacy notice, okay? But next, we need to determine when a dealer is required to provide that privacy notice. You do not need to give a privacy notice to someone who simply expresses an interest in buying a car from you, or just basically asks general questions about financing or leasing. However, if a person gives you personal information in connection with a potential transaction, even without completing a formal application. So, for example, if they give you personal information to get a quote on a financial package, then the privacy disclosure is required. Or if you just want to run a real quick credit report on them or something like that, you have to have that privacy notice. But you will need to determine whether or not the person is a consumer or a customer. And there is a big difference between the two, and I'll try to explain that. A person becomes a consumer when he or she gives you personal information in the context of possibly financing or leasing a vehicle from you, such as maybe just running that quick credit check. You would need to give them a privacy notice, say, for example, if you intend to disclose their personal information to that credit bureau. Now, if someone enters into a contract with you to buy a car and you extend credit or arrange for a third-party lender to extend the credit, then they become a customer. And in the leasing context, once someone enters in a lease agreement with you, they become your customer as well. Whether leasing or arranging credit, you must give them a privacy notice no later than at the time of the signing of that written retail contract or the lease agreement, even if you did not disclose their personal information to others. And by the way, if you lease cars and the initial term of the lease is at least 90 days, then the privacy rule applies to you as well. So do please keep that in mind. Third-party financing. When you're offering third-party lending, you must give the customer a privacy notice no later than when the customer signs the contract, even if you intend to assign that contract to that third party. So once that loan is assigned to your third-party lender, your customer becomes the third-party lender customer as well. And at that time, they would also need to comply with the privacy laws that we're discussing here as well. When a dealer enters into a retail installment contract with a person to finance the purchase of a vehicle, the dealer is the creditor on the contractor, such as a Buy Here, Pay Here Institute. A privacy notice must be provided as well. So when you do not assign the contract, the person remains your customer, and you will need to give them an initial privacy notice and then also an annual notice for as long as the customer relationship lasts. So if you are financing vehicles, You're also required to give the annual notice to that customer, and hopefully your buy here, pay here attorney will assist you on that. Or if you're using some really state-of-the-art third-party finance software that also helps you with buy here, pay here, they'll be able to assist you with that as well. So where do you find a fillable privacy notice? Well, if you want, you can type the entire URL that you see here on the screen. But the easiest way is to go to your favorite search engine, and we'll just use Google for this scenario. And we're just going to type in FTC sample fillable privacy notice. I know that's a long word there, but we're going to type in FTC sample fillable privacy notice. And here you see I have done that, and you're going to see with Google, there's FTC sample fillable privacy notice entered in the search box, and you're going to click on the link at the very top of the page that you see right here. You are then going to land on that FTC online form builder page, and you will need to scroll down and then click on the link you see that says online form builder. So you're just going to jump down there and click on that link that says online form builder. And for this scenario, let's say we're using Form 2 as an example right here. So let's just say that, just as an example, we're going to scroll down and use Form 2. And here you see a fillable FTC privacy notice. And let's take a quick look at this form. First, make sure and enter your dealership name at the very top of the form there. Okay, you want to make sure that you have your dealership name there. Then you want to enter any type of information that you're collecting in the what box, such as birthday, name, address, phone number, and email address. In the how box, you can enter your customer's name. And then in the light blue box, you're going to want to enter to whom you may share information. And if the customer can limit the sharing, then down towards the bottom, you can enter your phone number and website for further questions or to limit specific sharing of that information. Then on the second page, as you see here, be sure to enter your dealership name again. The information you might be sharing, again, like the customer's name and email, or maybe their social security number and any additional information that we're going to cover. Several more Federal Trade Commission guidelines later on in your dealer course. But remember, basically the only time you do not provide a privacy notice is when you've sold a vehicle for cash and no financing was involved, or if, say, for example, the customer brings in their own payment from their own bank. But what we are going to do is provide that privacy notice on any other transaction. So you definitely want to make sure that you are complying with that law. And hopefully those links to you there are helpful and will help you maintain compliance under the Gramm-Leach-Bliley Privacy Act's privacy notice. So there's some big fines for non-compliance there. So you definitely want to make sure that you are complying with not only those state finance laws that come out of Atlanta, but also all the finance laws that come out of Washington. So we've now completed Unit 6. And I want to remind you, you can review any of these training videos that you've completed at georgiadealer.com. Once again, that is georgiadealer.com. And just click on the dealer video link at the very top of the page for a full unit review. Let's move on to the next unit.